Epstein, and here we are with your morning flash update. And this update is for Thursday, and we're at the 2nd of May, 2024, just before 8:20 a.m. Central Time. So we've got a stock market that, as you know, yesterday was a wild day. We watched the Fed chair's press conference. We saw the market. It soared in the last, 15, 20 minutes, hour of trade. And there were huge bets in the S&P that we'd get 1% volatility up or down. They won. And then the bottom fell out of the market as it got right up there and came back down. Now, traders now, and this is that yin-yang effect that I often tell you about. You go home, but understand at 2, and I'm talking Central Time, when the press conference ends, 2:15, 2:20, whatever time it is there, Central Time in the afternoon, what time is that in Asia? I can tell you in Europe, they've left the offices. So then the market starts digesting what the Fed said, and the market took it to mean, right or wrong, that yes, there could be a rate hike, but that's not what the Fed is thinking about at this point. They're still very much focused on when they can cut. And that is why I think you're getting that right now. The dollar is stable. Metal sold off. You know, silver was just over 30 cents. So it has now dropped pretty close to what, about 14%, something like that. I'd like to see copper drop a little bit more. I think this is going to be one of the good buys for the summertime. Grain markets getting their first serious rally. This is just not the time of year where you want to get too bearish on the grains. The farmers don't bring their grain to market at this time. They're planting, they're doing field work, they're doing a lot of things, and they're not worried about that. Whatever they're holding, they like to hold. Bonds and notes doing the opposite of the stock market. They're saying, I'm not so sure you're right. Nothing's weakening just yet. I don't know that you're right on that. And by the way, if you look at the Challenger Gray report, which I'll show you, you see that it's not weakening so much, and that's corporate layoffs. You can see that you're stable in the energies, and I think this break is giving pause to the thinking of OPEC that no, they're not going to come back with any production in the month of June. They want this market to stay over $80, adding more fuel to the fire, which is we're already building stocks now. In the U.S., the biggest producer in the world, and we're building stocks. They add to them, probably add some price pressure, so I don't think you're going to get that going. Now, as we take a look at the day's event, Challenger Gray came out, 64,789 planned cuts. That's almost, just think about a third less than it was last month. The jobless claims, unchanged at 208,000. The market expected it up 5,000 at 212. I heard 214. Continuing jobless claims, unchanged at 1,774. So people can find jobs, number one, and number two, those that don't, and they get into continuing, it slips back, which means they're finding jobs. The trade balance, we know that we're spending more than we're taking in. It's a big problem, and we have to address this at some point. The first quarter 2024 preliminary non-farm production, okay, up 0.3. They expected it up 0.5. That's a miss, a complete miss. Non-farm labor costs were up 4.7%. They were looking for it up 4%. So labor is still jumping in the cost. Labor is still strong, and that is not the Fed's dream. Factory order data is going to come out this morning at 9, and for those of you that watch natural gas, you're going to get the numbers coming out at 9:30. They're looking for a 55 billion cubic foot bounce in that market. So when you put it all together, I don't know. You want to see how the markets respond in the early morning and then take a good hard look at what we've got. All of these markets are still underneath, most of them, the key moving average, the 18-day average of closes. The question in my mind in the euro, can this market break through the 107 and get towards the 106.5 zone? Why am I saying that? Because the very next press conference we get with the European Central Bank is going to be very, very dovish, in my opinion. And therefore, the market's going to start pricing in a rate cut. And when we're keeping our rates higher, they're going to drop theirs, and we're not in that cycle yet. Maybe they can't go down a real lot, but normally it should put pressure on that market, and that is my thinking at this point. Now I want to remind you about our free offers. Remember, you're only looking here at 9. This page drops down. If I had my IT person here with me, it's a little early for them, it would drop down. When you go to our website at iraepstein.com, all you need do is go to the far left free offers. And as you click each one of these, they go into a cart for you. And at the bottom of the page, you put in your name, your email address, and we get everything out to you, normally within 1 business day. And it comes by email. Definitely take a look at this, the daily QT price. I think you'll find it very interesting. It's a tool I use all the time. It gives me an idea where markets might go once a trend has set in. Got that? It doesn't tell you buy here, sell there. It's more of, hey, you want to take some money off the table here, here, and here. It's cool as can be. We teach you how to do it too in our company, and you could use our QT platform. You can do this yourself, both on the stock market and on the futures. So I think for those of you that learn how to use this, I think it becomes indispensable very fast. So again, iraepstein.com under free offers, or move your cursor up here. I'll catch you all at the end of the trading day. Take care.